Welcome to this week's market review by Team Alphaniti. As expected, while this week started on a high with Nifty making a live high at 17,947, it was followed by selling pressure emerging across stocks led by FII liquidation, who have been sellers in excess of 6,500 crores through this week. The DXY rallied strongly through the month of September and is currently at its highest level of 94.2 recorded in 2021. This has obviously led to across the board sell off in risk assets, with global frontline equity indices falling anywhere between 5 to 7% from their September highs. The Indian markets, however, continue to outperform most major indices, with falling only 2% from their highs. Ahead of the winter season in the Northern Hemisphere, the sharp rally in coal, crude oil, and natural gas prices globally, caused by supply disruptions, is lending a cause for concern. Countries such as China are resorting to rationing of power as coal shortages due to spiraling coal prices. And as per a Reuters report, it is estimated that up to 44% of the country's manufacturing activity stands to get hit due to these power cuts. Even in India, coal inventories at power plants are at their lowest in the past few years, which is a definite cause of concern. This is a space that needs to be watched closely for further buildup of inflationary pressures in the system. The US debt ceiling drama continues to unfold, and certain pockets of the market continue to play up on this account. We, however, believe that, as always, this is one can which is likely to get kicked down the road, and markets should tide over any hiccups on account of this concern. As was indicated last week, select pharma heavyweight stocks have been showing early signs of strength in an otherwise weak market. Keep watching this space for more action. Other two promising sectors that have started showing medium-term strength are the auto and the PSU index. One sector that may be avoided now is the IT space, which has shown clear signs of an interim peak in place. Further cues for this sector will come from the upcoming earnings season, which is set to kick off in less than 2 weeks. Market participants should do well to practice caution at current elevated levels on the index. While the market has tested the 20-day moving average today, it would be important to note that the 200-day moving average has not been tested in over a year, and the odds for a possible case for mean reversion are pretty high. Stay tuned for more interesting market level statistics that we hope to bring to you in the weeks ahead.